If you're an investor or trader, you might be thinking this morning about a stock market crash. Well, we've been talking about a bear market here at Master Trader and the market correcting since the beginning of the year. But is it going to crash? And what does that look like? How does it start? Well, we're scrolling back in time to see some patterns. Now, patterns alone aren't the only thing that causes a crash. Patterns give us a heads up that something's going wrong, that distribution is going on, but it really doesn't tell us how far down prices will go. There are what we call technical fundamentals that give us a heads up as to the underlying deterioration within the markets. And that's based on money supply as we look at yield curves and intermarket analysis and market internals. So I scroll back here to 2000. Some of you may or may not have been around back then, but that was a severe bear market in the beginnings of a crash. Now, when we think about crashes, we really tend to think about a swift drop, fast-moving prices to the downside. That happens at moments in time within a bear market. Then there are advances that seem very convincing, but bear markets continue for a while and they just go on and seem like they go on forever and just really take the heart out of investors and traders because they just seem like they won't stop. Now, looking at here what happened back in 2000, seeing the patterns, we have what's called kind of a retest pattern right there. And markets had advanced. It's typically preceded by a sharp advance. And we're looking at a monthly chart. If we were looking at this on a daily chart, it's going to look a lot sharper. But it wasn't an uptrend, making higher highs and higher lows and higher highs and higher lows. And then this sideways price action starts. Then it usually what happens is you get initial blast to the downside. It'll hold at some support and then, the lower high. And there are other factors. I'm going to look at something with you, but this is how it begins. And what you see happen back then in 2000, this was a 50% decline, which took, as you can see, from the beginning of 2000 until toward the end of 2002, the beginning of 2003, before the process began to reverse, where prices advanced quickly, and then there was a retest pattern, and then the rebuilding started, and you can see this little area of support right there. All right, so let's move ahead to another crash. You see the very nice advance, and we go here back to 2008. So it happened different this time, where it did move up, and it had this advance and a little pullback, and everything just looked all fine. It had this deep retracement. From a daily chart perspective, that was a heads up, and then it made a new high where the momentum slowed down between the highs, and then an initial move to the downside. So from the top, you don't get a crash. You get a sharp move to the downside, and then an attempt to try and go up. And here is what really looks like a pretty substantial type of crash scenario over a course of several months, which then became climactic here in 2009 and a V bottom, and it started an advance from there. What does it look like currently? Well, we have this advance that's been going on for a while. Right? This was the corona low, and it immediately started to advance, and we do get a pretty robust, sharp advance, but we don't really have a retest pattern yet. Now, what we have here is a new high, and it takes out this low, and buyers step up again, and we've got this sideways price action going on. We've got kind of a buy setup. It really didn't come down very much, but we've got this green bar that's now followed by a red bar. This month is not done. We've got another 5 or so days to go in it. Assuming it closes like this, this is going to suggest a move lower, maybe to 4,000. I think even possibly down here to 3,800, where we've got this cluster of open and closes down there. So ultimately, that might be the downside target, and then we'll just have to see how much it advances from there. Now let's look at a different market. Here's the NASDAQ 100. Now this went down over 80% in 2000, and here you could really see an advance. This consolidated, and it really accelerated vertically. This was the time of the internet craze. And what did it do? It had an initial drop. It had to move back up, and what we call a bear 180. If I can draw that 180 reversal here. This big green bar, a range expansion bar, immediately back down. So that's a key. Do you get range expansion bars that are bullish that immediately fail to the downside? These are what we call continuation type of patterns. And as it went down, it's tried to stall, down again, and then it begins to accelerate into this area of support. That's why we say look to the left. And now it begins to stabilize again. So let's look again at 2008. How did that form? And what we see is not the same type of advance, but it does start to go vertical, and we get a range expansion bar. And then a range expansion bar down. Bad sign. Hey, another retest. It drops and it retests, and then continuation pattern down. Then the vertical move to the downside, and then another retest. You can see what's occurring there time and time again, where you get a little crack that was preceded by an advance, and then a retest to go up, and it fails. And then we had this next advance, and then we have now, where the price had been advancing for a long time, and even though they advanced sharply, no big crack. And over here, rather than form some type of downside move and retest, we went sideways for well over a year. This was 2015 into 2016. And then another advance. And then things get all whippy over here. And then Corona. And here we are. So we're having the beginnings of, we had the advance, a new high. It breaks. We've got the green bar. And we've got a big down bar, a range expansion down bar. Now, assuming within the next 5 days this is closer like that, that strongly suggests it's going to go lower. Now, could it go sideways for a month and stall there for a bit? Sure. But this type of a pattern is one in which it says it's going to go down. Well, down to where? As always, we look to the left. 11,000 looks like a good area for the NASDAQ 100. This area of support somewhere between here would be a downside target. Now, what we have from the past that we don't have now, something that we've covered in the past, is yield inversions. So this is back in 2000. And this is a very long-term yield versus a very short-term yield, which inverted well ahead of time to give us a heads up when things started to chop around. And these are some others that are a little tighter than the one up here. And they were all in alignment. Let's go to 2008. 2006, getting inverted, and it held up. But here's where it went under the zero line. And trouble starts. And down it went. Now this is where the Fed starts adding liquidity in, and that takes time to repair the damage. But this is another way of us looking at, hey, things are getting healthier. Now, what do we have currently? We go, do we have the same scenario that could cause that type of crash? We're getting there. No. So while these tighter ones have inverted, giving us a heads up of problems ahead, which we started looking at the beginning of the year, this one here is still bullish. So while we could get a bear market correction, when we say crash and we talk about 50% drops, 90% drops to the NASDAQ, we don't believe that that's what's ahead. That being said, a lot of stocks are going down a lot and they're going to go lower. So money management is the key. Having stop losses is the key. And of course, education is the key as to knowing what type of market environments become the most dangerous, what type of market environments provide great opportunities after corrections. How do you measure that? This is what we do at Master Trader. Get a trial to the green room. We educate in there every day. Take our courses, the swing trading courses, the MTS course, option courses. Learn how to use different vehicles to make money in the market. And very importantly, how do you interpret the market environment as to whether it's safe for the longs? Is it a great opportunity for longs? Is it bearish? Is it bullish? How do you make money in it? This is what we do. Come to Master Trader, give a trial in the green room, talk to us, MT Live on Wednesdays at 12 o'clock, every Wednesday. Great education. So we hope to see you then. Any questions, email myself, Greg at Master Trader, and of course, Dan at Master Trader.